On a crisp autumn morning in downtown Atlanta, an elderly gentleman in a well-worn but carefully pressed suit made his way up the granite steps of First Metropolitan Bank. His weathered hands gripped a simple leather briefcase, containing documents that would change the course of many lives that day. At 72 years old, Mr. Richardson had seen his fair share of prejudice, but he carried himself with quiet dignity earned through decades of perseverance. The bank's interior gleamed with marble floors and mahogany desks, a testament to old money and even older attitudes. As Mr. Richardson approached the customer service desk, he couldn't help but notice how the security guard's eyes followed his every move, despite his conservative attire and professional demeanor. "I'd like to speak with someone about a significant business transaction," he said politely to the young receptionist, who barely glanced up from her computer screen. "Sir, the check cashing counter is over there," she replied dismissively, pointing toward a crowded corner of the bank. Mr. Richardson smiled patiently. "I'm actually here to discuss the purchase of several commercial properties. I believe I have an appointment with the senior loan officer." The receptionist's perfectly manicured fingers paused over her keyboard. She looked up, her expression a mixture of disbelief and barely concealed disdain. "Do you have an appointment confirmation?" As Mr. Richardson reached into his briefcase for the printed email, a boisterous voice carried across the lobby. "Well, if it isn't the gentleman from the community center." The bank's vice president, Mr. Wallace, strode over with an artificial smile plastered across his face. "I remember you from last month's charity gala. Although I must say, we're quite busy with serious business matters today." The elderly man remained composed, though his eyes reflected decades of dealing with such thinly veiled contempt. "Yes, we met briefly. I'm here about acquiring multiple properties in the downtown area." The appointment was scheduled for 10 a.m. Mr. Wallace's smile tightened. "Ah, yes, well, perhaps we should discuss this in a more appropriate setting." He gestured toward a small desk in the corner, rather than the private conference rooms typically used for large transactions. As they walked, Mr. Richardson noticed other bank employees exchanging knowing glances and whispers. He'd seen these expressions countless times throughout his life, people making assumptions based on nothing more than the color of his skin. What they didn't know was that Mr. Richardson had spent the last 40 years building a real estate empire from the ground up. Starting with a single convenience store inherited from his father, he had quietly acquired properties across 3 states, building a portfolio worth hundreds of millions. He'd learned early on that sometimes the best strategy was to let people underestimate you. The vice president pulled out a metal folding chair, a stark contrast to the plush leather seats visible in the conference rooms beyond. "Now then, what kind of properties were you interested in?" His tone suggested he was humoring what he assumed would be a waste of time. Mr. Richardson carefully removed several documents from his briefcase. "Actually, I'm interested in this property." He slid a familiar photograph across the desk. It was an aerial view of the very building they were sitting in. Mr. Wallace's patronizing smile faltered. "I'm not sure I understand." "I've already spoken with the bank's board of directors," Mr. Richardson continued calmly. "They've accepted my offer to purchase a controlling interest in First Metropolitan Bank. I'm here to finalize the paperwork and begin the transition of ownership." The color drained from Mr. Wallace's face as he stared at the official documents before him. The signatures of the board members were clearly visible, along with the 9-figure purchase price. "I thought it would be appropriate to visit my new bank in person," Mr. Richardson explained, his voice carrying just enough to reach the curious onlookers nearby. "After all, I believe in hands-on management and creating an environment of respect for all our customers." The whispers in the lobby had ceased. The security guard had suddenly found something fascinating to examine on the ceiling. The receptionist was intently studying her keyboard, her cheeks flushed red. Mr. Richardson stood up, straightening his tie. "Now, perhaps we could continue this discussion in your main conference room? I believe there are some changes in bank policy we need to address immediately." As he followed a stammering Mr. Wallace toward the executive suite, Mr. Richardson thought about his father, who had taught him that success was the best response to prejudice. He thought about all the other people who had been dismissed and disrespected in this very lobby, and he smiled, knowing that tomorrow would bring a new era for First Metropolitan Bank. The next few hours at First Metropolitan Bank unfolded like a carefully orchestrated symphony of change. As word spread through the building about the new owner, the atmosphere shifted palpably. The same employees who had been whispering and smirking earlier now scrambled to appear busy and professional, stealing nervous glances at the conference room where Mr. Richardson had begun his first executive meeting. Inside the mahogany-paneled conference room, Mr. Richardson sat at the head of the table, his presence commanding attention without raising his voice. The bank's senior management team had been hastily assembled, their expressions ranging from shocked to uncomfortable as they realized their new reality. "Let me be clear," Mr. Richardson began, his voice carrying the weight of experience, "I didn't buy this bank merely as a business investment. I bought it because I saw an opportunity to create change." He opened his leather briefcase once again, this time pulling out a thick folder filled with customer complaints and rejected loan applications. "Over the past year, my team has documented numerous instances of discriminatory practices at this institution. We've found patterns in loan rejections, differences in interest rates, and disparities in customer service that cannot be explained by any legitimate banking criteria." The room fell silent. A few managers shifted uncomfortably in their leather chairs, while others stared intently at their notepads. Mr. Wallace, who had been so condescending earlier, sat with his hands folded, his usual swagger replaced by a look of growing concern. However, Mr. Richardson continued, his tone softening slightly, "I'm not here to point fingers or seek revenge. I'm here to build something better. Starting today, we're going to transform First Metropolitan into a model of ethical banking and community service." He stood up and walked to the wall-mounted screen, clicking through a presentation that detailed his vision for the bank. The plans were comprehensive: new training programs, revised lending criteria, community outreach initiatives, and partnerships with local businesses and organizations. As he spoke, Mr. Richardson couldn't help but remember his own first attempt to get a business loan 30 years ago. He had been turned away from this very bank, despite having a solid business plan and excellent credit. That rejection had forced him to work twice as hard, to be more creative in finding capital, and ultimately, to build his empire through sheer determination and strategic thinking. "Your expertise and experience are valuable," he assured the management team, "but our methods and mindset must change. Those who are willing to embrace this new direction will find opportunities to grow with us. Those who aren't." He let the implication hang in the air. Meanwhile, in the bank's lobby, something remarkable was happening. As customers conducted their regular banking business, they noticed subtle but significant changes in how they were being treated. The security guard who had been following certain customers was now greeting everyone with genuine respect. The receptionist who had been dismissive earlier was now offering assistance to each person who entered, regardless of their appearance or attire. Word began to spread through the community. People who had felt unwelcome at First Metropolitan for years began sharing stories about the mysterious elderly gentleman who had purchased the bank. Some recalled seeing him at community events, quietly observing from the background. Others remembered him from his early days running a small convenience store, always treating everyone with dignity regardless of their circumstances. By late afternoon, local news vans had begun gathering outside the bank. The story of an elderly black man purchasing one of the city's oldest financial institutions was too compelling to ignore. But Mr. Richardson wasn't interested in publicity. He was focused on the work ahead. In his temporary office, the same one where countless loan applications had been rejected based on zip codes and last names, Mr. Richardson began reviewing personnel files. He noted which employees had histories of complaints and which had shown integrity in their dealings with all customers. As the day drew to a close, he called in Mrs. Chen, a junior loan officer who had the highest customer satisfaction ratings across all demographics. Her personnel file showed she had been passed over for promotion 3 times, despite her outstanding performance. "Tell me," he asked her, "what changes would you make to our loan approval process if you were in charge?" Mrs. Chen's eyes widened at the question. For years, she had kept detailed notes about improvements that could make the bank services more accessible and fair to all communities. She had submitted proposals, only to have them ignored or dismissed. Now, finally, someone was listening. As she shared her ideas, Mr. Richardson smiled. This was exactly what he had been looking for, people within the system who had the vision and courage to make it better, who just needed the opportunity to implement change. The sun was setting over the Atlanta skyline when Mr. Richardson finally packed up his briefcase. As he walked through the lobby, he paused to straighten a photograph on the wall, a black and white image of the bank's founding in 1925. Tomorrow, he would add new photos to these walls, images that reflected the diverse community the bank served. Outside, a small crowd had gathered, including some faces he recognized from the neighborhood. They weren't there to protest or complain, they were there to witness history. As Mr. Richardson descended the same steps he had climbed that morning, a young boy tugged on his mother's sleeve and asked, "Who is that man?" The mother smiled, tears glistening in her eyes. "That's the man who just showed everyone that anything is possible when you refuse to let others define your worth." Mr. Richardson nodded politely to the crowd and headed toward his car, already planning tomorrow's agenda. The real work was just beginning, but for the first time in its long history, First Metropolitan Bank was truly living up to its motto, a bank for all people. As Mr. Richardson drove home that evening, his mind wandered back to 1962, when his father's small convenience store had been the cornerstone of their community. The store wasn't just a business, it was a gathering place where neighbors shared stories, where children learned their first lessons about saving money, and where dignity was served alongside everyday necessities. He remembered watching his father extend credit to families during hard times, keeping meticulous records in a worn leather notebook. "Son," his father would say, "a man's character is worth more than the money in his pocket." Those families always paid their debts, often in small installments, but they never forgot the respect they were shown when they needed it most. The convenience store sat on the corner of Oak and Pine Streets, a modest building with a tin awning and a bell that chimed whenever the door opened. Young Richardson spent his afternoons there after school, stocking shelves and learning arithmetic by calculating change. But his most valuable lessons came from observing how his father treated every customer with equal respect, regardless of their circumstances. In 1975, when many small businesses were struggling, his father had approached First Metropolitan Bank for a loan to expand the store. Despite their impeccable credit history and growing customer base, they were turned away without explanation. Later, they learned that another store owner, with less experience and weaker financials but a different skin color, had received approval for a similar loan. Instead of letting bitterness take root, his father had taught him an invaluable lesson. "They see our color," he said, "but they don't see our capability. Let's show them what they're missing." They restructured their business plan, worked longer hours, and eventually secured funding through a network of community supporters who believed in their vision. By 1980, they had expanded to 3 stores. Mr. Richardson, armed with a business degree in his father's wisdom, began looking beyond retail. He noticed properties in developing areas that larger investors overlooked. While others saw declining neighborhoods, he saw communities with potential. He purchased his first commercial property, a struggling strip mall, and transformed it by offering favorable lease terms to local entrepreneurs who needed a chance to prove themselves. One of those entrepreneurs was Mrs. Washington, a skilled seamstress who dreamed of opening her own alterations shop. Traditional banks had dismissed her business plan, but Mr. Richardson saw in her the same determination he and his father had possessed. He not only rented her a space but helped her develop a business strategy. Today, her company had grown into a successful chain of custom clothing stores across the state. As his real estate portfolio grew, Mr. Richardson maintained a low profile. He attended charity events and community meetings, observing how other successful business people operated. He noticed how some of the most influential deals happened on golf courses and in private clubs where people like him were still unwelcome. Rather than fight for entry into these exclusive circles, he created his own networks, connecting ambitious entrepreneurs with opportunities and resources. By the mid-1990s, his real estate empire had grown substantially, but he never forgot his roots. He established a foundation that provided microloans to small businesses, particularly in underserved communities. The foundation's offices operated out of his father's original convenience store, which he had preserved as a reminder of where it all began. Pulling into his driveway now, Mr. Richardson smiled at the irony. The same bank that had rejected his father's loan application decades ago was now under his ownership. But his satisfaction came not from revenge, but from the opportunity to create meaningful change. Inside his home office, he picked up a framed photograph of his father standing proudly in front of the convenience store. The image was faded, but the dignity in his father's stance remained clear. Next to it sat the old leather notebook where his father had recorded customer credits, a reminder that banking, at its core, should be about trust and community service. His phone had been buzzing all evening with calls from reporters and business associates, but there was only one call he wanted to make. He dialed a number he knew by heart. "Mrs. Washington?" "Yes, it's Mr. Richardson. Remember how we talked about expanding your business last month? I think I might have found the perfect opportunity. How would you like to open a new location in the First Metropolitan Bank building?" As he discussed the details with her, he could hear the emotion in her voice. She had been a customer at First Metropolitan once, years ago, but had left after being treated dismissively. Now, she would be returning as a successful business owner and tenant. Later that night, as he prepared for bed, Mr. Richardson thought about tomorrow. There would be resistance to change, both subtle and overt. Some employees would struggle to adapt to the new culture. Competitors would watch closely, waiting for him to fail. But he had spent a lifetime proving people wrong about what he could achieve. On his nightstand lay a small notebook, similar to the one his father had used. But instead of recording customer credits, this one contained his vision for the bank's future, a detailed plan to transform First Metropolitan into an institution that would judge people by their character and potential, not their appearance or address. Tomorrow would bring new challenges, but Mr. Richardson felt ready. After all, he had learned from the best, a man who had taught him that success wasn't just about making money, but about making a difference. As he drifted off to sleep, he could almost hear his father's voice, "Son, you didn't just buy a bank today. You bought an opportunity to change lives." Word of the changes at First Metropolitan Bank spread through Atlanta's financial district like wildfire. By the end of the first week, the story had caught the attention of every major bank in the region. Some dismissed it as a publicity stunt, while others watched with growing unease as Mr. Richardson's innovations began to show immediate results. The first major change came in the form of the bank's loan evaluation process. Gone were the old criteria that had unfairly weighted zip codes and demographic factors. Instead, Mr. Richardson implemented a blind application system where personal identifying information was removed during initial reviews. Applications were judged solely on financial merit, business plans, and community impact. One morning, a small business owner named Mrs. Taylor walked into the bank, clutching a worn folder containing her dream, a plan to open a community daycare center in a struggling neighborhood. She had been rejected by 7 other banks over the past year. Her hands trembled as she approached the loan officer's desk, expecting another disappointment. Instead, she found herself sitting across from Mrs. Chen, recently promoted to head of community business development. For 2 hours, they went through her business plan line by line. Mrs. Chen offered suggestions for improvement and connected her with free business mentorship programs sponsored by the bank. Your experience running an informal daycare from your home for the past 5 years is valuable, Mrs. Chen explained. That's 5 years of proven dedication and community trust. Let's turn that experience into a formal business plan that will work. 2 weeks later, Mrs. Taylor's loan was approved. As she left the bank holding her approval letter, she burst into tears. A young teller rushed over with tissues, and soon several customers gathered around to hear her story. It turned out one of them was a retired contractor who offered to help her renovate her chosen location at a discounted rate. The bank's transformation wasn't limited to its lending practices. Mr. Richardson introduced a revolutionary training program for all employees, bringing in community leaders and former customers who had faced discrimination to share their experiences. The sessions were emotional and eye-opening for many staff members. During one such session, Mr. Wallace, the former vice president who had initially dismissed Mr. Richardson, raised his hand. His voice was quiet, almost ashamed. "I've been in banking for 25 years, he said, and I never realized how many people we were hurting with our assumptions. I thought I was protecting the bank's interests, but I was just perpetuating injustice." Mr. Richardson had given him a choice: adapt to the new way of doing things or leave. To everyone's surprise, Mr. Wallace chose to stay, volunteering to lead a new initiative helping other banks implement similar reforms. The changes attracted attention from unexpected quarters. One afternoon, a delegation from the city's largest banking association arrived unannounced. They had come to express concerns about First Metropolitan's new policies, disrupting the market. Mr. Richardson invited them into the lobby to observe. They watched as an elderly Vietnamese couple, who spoke limited English, were treated with patience and respect as they opened their first savings account. They saw a young black entrepreneur receive approval for a business expansion loan based solely on his excellent track record and solid business plan. They witnessed a Hispanic single mother learn about affordable mortgage options that could help her move her children out of a dangerous neighborhood. "Gentlemen," Mr. Richardson addressed the delegation, "this isn't disruption. This is banking as it should be. Every person who walks through those doors carries dreams and potential. Our job is to help those dreams grow, not to judge who deserves them." The bank's success began to show in its numbers. Default rates remained low while community investment soared. Small businesses funded by First Metropolitan began hiring locally, creating a ripple effect of economic growth in previously overlooked neighborhoods. One day, a group of young bankers from a competing institution asked Mr. Richardson why he hadn't simply started his own bank instead of buying an existing one. He led them to the wall of historic photos in the lobby, now updated to include images reflecting the community's true diversity. "This building has stood here for nearly a century," he explained. "For too long, it was a symbol of exclusion. By transforming it rather than starting fresh, we're showing that change is possible anywhere, if people are willing to do the work." The bank's conference rooms, once named after past presidents and board members, were renamed to honor community leaders who had fought for economic justice. The imposing security barriers that had made many customers feel unwelcome were replaced with an open floor plan and comfortable seating areas where bankers and clients could meet as equals. Perhaps the most significant change was in the bank's relationship with local schools. Mr. Richardson launched a financial literacy program that sent bank employees into classrooms to teach students about money management, saving, and entrepreneurship. The program was particularly meaningful to him, as he remembered how his own father had taught neighborhood children about money at their convenience store. One Friday afternoon, a young boy who had attended one of these school programs walked into the bank with his grandmother. He had saved $30 from his allowance and wanted to open his first savings account. Mr. Richardson happened to be in the lobby and overheard the boy explaining compound interest to his grandmother, using the exact examples from the school program. The scene brought tears to his eyes. He watched as the teller handed the boy his very own passbook, treating him with the same respect given to the bank's wealthiest clients. The boy stood a little taller, clutching his passbook like a treasure. Later that day, Mr. Richardson added a note to his father's old leather notebook, which he now kept in his office. Today, we didn't just open a savings account. We opened a door to the future. This is how we build legacy, one dream, one opportunity, one person at a time. As the sun set over Atlanta, casting long shadows through the bank's windows, Mr. Richardson stood in the lobby, watching customers complete their end-of-week transactions. Each face told a story, each transaction represented a step toward someone's dream. The bank was no longer just a building where money changed hands, it had become a cornerstone of hope in the community, just like his father's convenience store had been all those years ago. 3 months after Mr. Richardson's takeover of First Metropolitan Bank, the financial industry could no longer ignore the quiet revolution happening in Atlanta. The bank's success had caught the attention of national media, and journalists began arriving from across the country to document what they called the Richardson method. One rainy Tuesday morning, a reporter from a prestigious financial magazine sat in Mr. Richardson's office, puzzling over the latest quarterly reports. The numbers seemed impossible, loan defaults were down, community investment was up, and bank profits had increased by 20%. Most surprisingly, other banks in the area had begun losing customers to First Metropolitan. "I don't understand," the reporter admitted, adjusting her glasses. "You're lending to people that other banks consider high risk, yet your default rates are lower than the industry average. How?" Mr. Richardson smiled and gestured to the window overlooking the busy street below. "Walk with me," he said, leading her out of the office. Their first stop was a bustling restaurant across from the bank. The owner, a former taxi driver, greeted them warmly. 6 months ago, he had been rejected by every bank in town, despite having saved $50,000 and developed a detailed business plan. First Metropolitan had not only approved his loan but connected him with an experienced restaurant mentor. "We don't just lend money," Mr. Richardson explained as they enjoyed the restaurant's signature coffee. "We invest in people's potential. Every loan officer here is trained to be a partner in our customer success." As they walked through the neighborhood, Mr. Richardson pointed out business after business that had flourished under the bank's new approach. A tech startup founded by 2 high school teachers. A sustainable fashion boutique run by a former factory worker. A medical clinic serving low-income families. But success had brought its own challenges. Other banks, feeling threatened by First Metropolitan's growing popularity, had begun spreading rumors about the bank's stability. Some wealthy clients, uncomfortable with the bank's new diverse clientele, had withdrawn their accounts. Mr. Richardson had anticipated this. He reached out to these departing clients personally, not to beg them to stay, but to share the stories of the bank's success. Many were surprised to learn that their money had been safer than ever, as the bank's community-focused approach had actually reduced risk through deeper understanding of their borrowers. The transformation hadn't been easy for everyone. Some longtime employees struggled to adapt to the new culture. Mr. Richardson remembered one senior loan officer who had worked at the bank for 30 years. Instead of firing him for resistance to change, Mr. Richardson paired him with a young community organizer who helped him understand the neighborhoods he had previously dismissed. That loan officer now ran the bank's most successful community outreach program, using his years of banking experience to help aspiring entrepreneurs strengthen their business plans. Word of the bank's practices spread through unlikely channels. One day, a group of international bankers arrived from South Africa, eager to learn how First Metropolitan had managed to create a banking model that promoted both social justice and profitability. They spent a week shadowing the bank's employees, taking detailed notes on everything from the blind loan application process to the community mentorship programs. But perhaps the most significant validation came from an unexpected source. The grandson of First Metropolitan's founding chairman requested a meeting with Mr. Richardson. The elderly man arrived leaning on a cane, his white hair neatly combed. My grandfather built this bank in 1925, he said, looking around the transformed lobby. He had very traditional ideas about banking. But watching what you've done here. His voice cracked with emotion. This is what banking should have been all along. You've made this institution something to be truly proud of. That evening, after the meeting, Mr. Richardson sat in his office reviewing applications for the bank's new internship program. They had received hundreds of applications from young people inspired by First Metropolitan's story. Many came from backgrounds traditionally underrepresented in banking. One application caught his eye, a young woman who had been raised by her grandmother in the same neighborhood where his father's convenience store had stood. Her essay spoke of watching her grandmother struggle to get loans for her catering business, and how that experience had inspired her to pursue a career in finance. Mr. Richardson thought about how his father would have loved to see this, a new generation eager to carry forward the principles of fairness and community service that he had taught in their small store. The bank's influence continued to grow in unexpected ways. Other financial institutions, seeing First Metropolitan's success, began reaching out for guidance on implementing similar programs. Mr. Richardson established a consulting division dedicated to helping other banks transform their practices. But he never lost sight of the personal impact of their work. Every morning, he made a point of spending time in the lobby, watching as customers were treated with the dignity they deserved. He knew every security guard, teller, and janitor by name, just as his father had known everyone who entered their store. One afternoon, he overheard a conversation between a teller and an elderly customer who remembered the bank from its less inclusive days. "I never thought I'd see this place change," the customer said, tears in her eyes. "My mother used to make me wait outside when she came here. Now my granddaughter has a student account and wants to be a banker." These moments reminded Mr. Richardson that success wasn't just about numbers on a balance sheet. It was about changing perceptions, breaking down barriers, and creating opportunities for future generations. As the sun set over Atlanta, casting a golden glow through the bank's windows, Mr. Richardson added another note to his father's old notebook: banking isn't just about money. It's about believing in people's dreams and giving them the tools to make those dreams real. When we do that, everyone profits. The magazine article would later describe First Metropolitan as a blueprint for ethical banking in the 21st century. But for Mr. Richardson, it was simply the fulfillment of his father's legacy, a business that served its community with respect, dignity, and faith in human potential. 6 months into Mr. Richardson's ownership of First Metropolitan Bank, a different kind of challenge emerged. The bank's success had attracted attention from powerful competitors who saw its community-focused model as a threat to traditional banking. Several larger banks had begun aggressively targeting First Metropolitan's customers with seemingly attractive offers, hoping to undermine the bank's growing influence. One morning, Mr. Richardson arrived at work to find an unusual scene in the lobby. A group of small business owners, customers of First Metropolitan, had gathered to share their stories. They had all received promotional letters from competing banks offering lower interest rates and signing bonuses to switch their accounts. Instead of accepting these offers, they had come to warn Mr. Richardson and express their loyalty. A local bakery owner stood up and spoke for the group: "These other banks didn't believe in us when we were starting out. They didn't see our potential. Money isn't everything, trust and respect matter more." This display of community support touched Mr. Richardson deeply, but he knew they needed to respond strategically to this challenge. That afternoon, he called an emergency meeting with his management team. "Our competitors think banking is just about interest rates and promotional offers," he told them. "Let's show them what real banking looks like." Over the next few weeks, First Metropolitan launched a series of innovative programs that went far beyond traditional banking services. They created a business success center where entrepreneurs could access free consulting, networking events, and shared office space. The center quickly became a hub of collaboration, with experienced business owners mentoring newcomers. One of these mentorship connections led to an extraordinary partnership. A struggling food truck owner met a retired restaurant consultant who helped him transform his business model. Within months, the food truck had expanded into a catering service employing 15 people from the local community. The bank also introduced a revolutionary education initiative. Every new business loan came with access to financial management courses, marketing workshops, and technology training. These resources helped ensure that borrowers had the skills they needed to succeed, not just the capital. Mrs. Chen, now the bank's community development director, implemented a unique neighborhood ambassador program. Local residents were trained to serve as liaisons between the bank and their communities, helping identify needs and opportunities that traditional banking metrics might miss. One such ambassador discovered a group of immigrant women who had been running an informal craft cooperative from their homes. With the bank's help, they formed a legal business entity, opened a small shop, and began selling their handmade goods online. Their success inspired others in their community to pursue their entrepreneurial dreams. Mr. Richardson's approach to competing with larger banks was unconventional. Instead of lowering rates to match their offers, he invited customers to compare the total value proposition. First Metropolitan's loans might have slightly higher interest rates, but they came with resources, support, and a commitment to long-term success that other banks couldn't match. The strategy worked. Not only did First Metropolitan retain its customers, but it continued to grow as word spread about its comprehensive approach to banking. Even some wealthy clients who had initially left the bank began returning, attracted by the energy and innovation they saw. One such returning client was a prominent real estate developer who had withdrawn his accounts during the initial transition. He scheduled a meeting with Mr. Richardson to explain his change of heart. "I've been watching what you're doing here," the developer said. "You're not just running a bank, you're building a community. I want to be part of that." He proposed a partnership to develop affordable housing units above small business spaces, creating opportunities for entrepreneurs to live near their businesses. The bank's influence began extending into unexpected areas. When a historic black church faced foreclosure by another bank, First Metropolitan stepped in. Instead of simply refinancing the loan, they worked with the congregation to develop part of the church's land into a community center that generated rental income to support both the church and local youth programs. Mr. Richardson's innovative approach caught the attention of policymakers. He was invited to testify before a state banking committee about financial inclusion. Rather than going alone, he brought a panel of small business owners who had succeeded with First Metropolitan support. Months ago, came in to make her regular payment and proudly reported hiring her 5th employee. They observed a teenager making his weekly deposit from his car washing business, now expanding to include basic detailing services. "What you're seeing isn't just banking," Mr. Richardson explained. "It's community transformation in action." The advisor noticed something unusual about the bank's atmosphere. Instead of the typical hushed tones and nervous energy found in most banks, there was a sense of warmth and purpose. Customers greeted each other by name, and bank employees seemed genuinely engaged with each person they served. In the Business Success Center, they found a group of women entrepreneurs participating in a workshop on e-commerce strategies. One participant, a grandmother who had been selling her homemade hot sauce at local markets, was learning how to set up an online store. Next to her, a young college student was taking notes while planning her sustainable fashion business. "Most banks see small businesses as risky investments," Mr. Richardson told the advisor. "We see them as the foundation of strong communities. When you invest in people's dreams and give them the tools to succeed, the whole community prospers." The bank's impact had begun reaching far beyond Atlanta. News outlets across the country were reporting on what they called the Richardson effect, a phenomenon where communities experienced significant economic growth after their local banks adopted First Metropolitan's model. In Chicago, a bank had transformed an abandoned warehouse into a business incubator, following First Metropolitan's blueprint. In Houston, another financial institution had launched a similar education initiative, helping small business owners develop crucial skills. A bank in Seattle had adopted the blind loan application system, leading to a surge in successful minority-owned businesses. But perhaps the most powerful evidence of the bank's influence came from the stories of individual lives changed. Mr. Richardson kept a special section in his father's notebook dedicated to these testimonials. There was the story of a retired teacher who had always dreamed of opening a bookstore. Other banks saw only her limited retirement income, but First Metropolitan saw her extensive knowledge of literature and connection to the local schools. Now her bookstore hosted reading programs for children and had become a neighborhood gathering place. A former gang member had received a loan to start a youth mentoring program, combining sports training with academic tutoring. His past would have disqualified him at most banks, but First Metropolitan focused on his detailed business plan and strong community support. The program now served hundreds of at-risk youth, breaking cycles of violence and poverty. The congressional advisor spent 3 days at First Metropolitan, diving deep into its operations. She was particularly impressed by the bank's use of technology to support its human-centered approach. Their custom software could track not just financial metrics but community impact indicators, jobs created, educational opportunities provided, local business partnerships formed. During her final meeting with Mr. Richardson, she asked what he considered his greatest achievement. He led her to a wall of photographs in the bank's community room. The images showed the transformation of various neighborhoods over the past year, renovated storefronts, new small businesses, community gardens, and most importantly, people working together to build something better. Our greatest achievement, he said, isn't in the numbers, though those are impressive. It's in showing people what's possible when financial institutions truly serve their communities. The advisor's report to Congress would later inspire discussions about national banking reform. But Mr. Richardson knew that real change couldn't wait for legislation. He continued expanding the bank's initiatives, always looking for new ways to break down barriers and create opportunities. One morning, he received a letter from a bank president in a small Midwest town. The letter described how they had implemented First Metropolitan's community-focused model and included photos of their first successful loan recipients, a group of farmers who had formed a cooperative to process and sell their produce locally. Mr. Richardson shared these stories with his staff during their morning meetings, reminding them that their work was part of something larger than themselves. Every time we say, yes, to someone's dream, he would say, we create a ripple effect that touches countless lives. The bank's influence began extending into education. Local schools started incorporating First Metropolitan's financial literacy curriculum into their programs. College business departments sent students to intern at the bank, learning a new approach to finance that balanced profit with social responsibility. One of these interns, a young woman whose parents had once been rejected for a small business loan by the old First Metropolitan, now led the bank's innovative mobile banking program. She had developed an app that brought banking services directly to underserved neighborhoods, complete with financial education resources and business development tools. As First Metropolitan's reputation grew, Mr. Richardson received numerous offers to sell the bank to larger institutions. They promised to maintain his policies while providing more resources and broader reach. But he remembered his father's words about the importance of personal connection and community trust. Instead of selling, he focused on controlled growth and maintaining the bank's core values. He established a leadership training program to ensure that future bank executives would understand and continue the mission. The program included not just banking skills but required extensive community service and mentorship experience. Late one evening, as Mr. Richardson was preparing to leave the bank, he noticed a group of young entrepreneurs still working in the Business Success Center. They were from different backgrounds, speaking different languages, but all focused on the same goal, building something meaningful for their communities. The scene reminded him of the conversations that used to happen in his father's store, where people from all walks of life came together to share their dreams and support each other. He realized that First Metropolitan had become more than a bank, it had become a catalyst for positive change, just as that small convenience store had been decades ago. In his father's notebook that night, he wrote, "True wealth isn't measured in dollars and cents. It's measured in lives changed, dreams realized, and communities strengthened. Banking is just the tool, people are the real investment." 5 years had passed since that autumn morning when Mr. Richardson first climbed the steps of First Metropolitan Bank. The financial world had changed dramatically during that time, and much of that change could be traced back to the quiet revolution that began in Atlanta. On a bright spring morning, Mr. Richardson stood in front of his father's old convenience store, now transformed into the First Metropolitan Community Heritage Center. Inside, visitors could learn about the history of community banking, economic justice, and the power of believing in people's potential. The worn leather notebook that had recorded customer credits decades ago was displayed in a special case, alongside photographs documenting the neighborhood's transformation. A group of banking students from across the country had gathered for the center's opening ceremony. They were part of a new generation of financial professionals committed to ethical banking practices, many inspired by First Metropolitan's example. "My father started with a simple idea," Mr. Richardson addressed the crowd. "He believed that everyone deserves a chance to build a better future, and that true success comes from lifting others as you climb. He ran our family store on those principles, and now those same principles have transformed banking across the nation." The evidence of that transformation was everywhere. In the 5 years since Mr. Richardson bought First Metropolitan, over 200 banks across the country had adopted similar community-focused models. The Richardson method was now taught in business schools, and a new certification program recognized banks that met strict standards for ethical lending and community investment. But the most powerful testament to the bank's impact could be found in the stories of individual lives changed. As part of the Heritage Center's opening, a documentary filmmaker had collected interviews with people whose lives had intersected with First Metropolitan over the years. There was the story of a former custodian who now owned a successful cleaning company with contracts across the city. She had started with a single mop and a dream, now she employed 30 people and provided full benefits to all her workers. A group of high school students had turned their weekend computer repair service into a thriving tech support company, guided by mentors from the bank's Business Success Center. They were now helping other young entrepreneurs learn the skills needed to succeed in the digital economy. The former bank vice president, Mr. Wallace, had become one of the most passionate advocates for ethical banking. He traveled the country speaking about his own transformation, showing other banking executives that change was possible and profitable. As Mr. Richardson walked through the Heritage Center after the ceremony, he paused at a new addition to the display, a wall of letters from people around the world who had been inspired by First Metropolitan's story. One letter particularly caught his attention. It was from a young banker in South Africa who had started a similar program in his township, helping small businesses grow and create jobs. The bank's influence had extended far beyond traditional banking. Its education programs had been adopted by school districts across the country, teaching students not just about money management, but about the responsibility that comes with financial success. The Business Success Center model had been replicated in dozens of cities, creating networks of support for entrepreneurs from all backgrounds. These centers had become hubs of innovation, where people shared knowledge, resources, and opportunities. First Metropolitan's blind loan application system had become an industry standard, recognized for its effectiveness in reducing bias while maintaining high success rates. Other banks had discovered, as Mr. Richardson had known all along, that character and determination were better predictors of success than zip codes or credit scores alone. The bank's Community Ambassador program had evolved into a nationwide network of local leaders who helped financial institutions better understand and serve their communities. These ambassadors became bridges between banks and neighborhoods that had historically been underserved by traditional financial institutions. One afternoon, as Mr. Richardson sat in his office reviewing the bank's latest community impact report, a young woman knocked on his door. She introduced herself as the granddaughter of one of his father's first customers at the convenience store. "My grandmother told me stories about your father," she said, "about how he helped people when other businesses turned them away. She said he treated everyone with dignity, no matter who they were or what they had. I see that same spirit in this bank today." She shared her own story of starting a mobile health clinic that served homebound elderly residents. First Metropolitan had not only provided the initial funding but had connected her with other healthcare entrepreneurs who helped her expand her services. As the sun began to set, casting long shadows through the bank's windows, Mr. Richardson walked through the lobby one last time that day. The space had changed over the years, modern technology mixed with comfortable seating areas where people could meet and discuss their dreams. But the fundamental spirit of the place remained the same. It was a space where hope thrived and opportunities grew. He thought about his father, who had taught him that true success wasn't measured in dollars but in lives improved. The convenience store had been more than a business, it had been a beacon of hope in the community. Now, First Metropolitan carried that legacy forward on a scale his father could never have imagined. In the Heritage Center, next to his father's old notebook, Mr. Richardson had added a new volume. In it, he had written a message to future generations of bankers: banking is not just about managing money, it's about believing in people's potential and giving them the tools to succeed. When we invest in human dignity and community strength, the returns are beyond measure. As he prepared to leave for the day, a young bank employee stopped him. "Mr. Richardson," she said, "I just wanted you to know, my brother got his business loan approved today. He's going to open that repair shop he's been dreaming about." Mr. Richardson smiled, remembering that day 5 years ago when he first walked into the bank, facing dismissive looks and prejudiced assumptions. Now, those same halls echoed with stories of dreams fulfilled and lives transformed. The final entry in his father's notebook read, "The greatest legacy we can leave is not the buildings we build or the money we make, but the hope we inspire in others. When you show people what's possible, you give them the courage to reach for their own dreams. And in doing so, you change not just their lives, but the future itself." First Metropolitan Bank had become more than just a success story, it had become a blueprint for how financial institutions could serve as catalysts for positive change in society. The elderly gentleman who had been humiliated in a bank lobby 5 years ago had transformed not just one institution, but an entire industry's understanding of what banking could and should be.